One of the most common goals I see across the City Girl Savings community is home ownership. People reach out to me sharing they want to own a home one day. Clients and I work to prioritize saving for a down payment. Dreams of passive income from rentals or Airbnbs fill people with hope. Whether home ownership is in the near future for you or not, there are things everyone can do right now to put themselves in a position to purchase when they're ready. In this episode, I'm talking with Austin, Texas-based realtor Coco Massara about all things homeownership, rental properties, and more. Get ready to learn what home buying is all about. Welcome to the City Girl Savings Podcast. I'm Rhea Reeves, founder and finance coach of City Girl Savings. I turned my life around with budgeting many years ago, and now I'm on a mission to help others do the same. I fully believe that you can enjoy your life on a budget, and this weekly show will focus on the intersection of money and the city girl lifestyle. Join me every week along with some special guests as I share my experiences, advice, and guidance on navigating life and money as an experience-loving millennial. So I know my listeners are going to find this very interesting, but Coco and I actually went to high school together and we were both cheerleaders. That is how we met and became friends. When I moved to California for school, I lost touch with a lot of my high school friends, but Coco and I were able to rekindle our friendship after I moved back, and she even helped me rent out my mom's house. Now, I love to stay up to date with Coco's Instagram because she shares so much great information about home buying, property taxes, and so much more. Coco, I am so excited for this conversation. I know my listeners are going to love what we're going to talk about today, but before we start, can you just share a little bit about yourself and how you got into real estate?
Sure. So I'd say my interest in real estate really started in 2016. I purchased my first property that year. And prior to that, you would be so upset, Rhea, but my financial responsibility, I was very a frivolous spender. And so during that time, I had started saving for an international trip. I really wanted to take 6 months to travel internationally. And then life happened. I ended up falling into a career that I really loved and had some savings saved up and really saw myself living in Austin, Texas. And that's where I really started to explore home buying. At the time, my partner, now husband, had purchased a property prior to me, and I really wanted to experience the opportunity of living by myself. I had never done it before, and I knew that our relationship was going to end up in a more serious level, if you will. We knew we would eventually get married. And so I really wanted to take that opportunity to live by myself. So at the time, I decided, using that money to buy a property for myself after looking at rentals and realizing that I could essentially pay the same and actually own a home. And so that's what I did. And as a woman of color, as a single female at the time, purchasing a property on your own is an incredible and empowering experience. I never thought that was a journey that I would find myself in. And so that was kind of a launching point. I didn't get into real estate until about 4 or 5 years later. I actually studied for my real estate exam, but fell into a career that I loved with a beverage company. And after that company ended up selling to Nestle, I kind of outgrew that position and wanted something more for myself and wanted to find myself in a position where I could grow and there was no ceiling. I was working really hard hours and really long hours, and the pay just wasn't where I wanted it to be. So my mom has been in the industry for 16 years. And so I never thought I would actually be working with her, but it was in 2020 that I decided to join her team. And I never looked back. I love real estate. It's such an important way to grow wealth for yourself.
Wow, how inspiring that you purchased your own home, like you said, as a single woman of color. Like, that is amazing. And I'm curious, did the experience that you had with purchasing your own home, like, did that play a role in your decision to eventually get into real estate? Like, was it a pleasant process for you? And did you kind of take that experience and put it into your wheelhouse, so to speak, as you dove into your career in real estate?
Yeah, that's a great question. I was really lucky because my mom was my realtor. So, really, she was able to hold my hand throughout the entire process. But even if you have somebody that is holding your hand, it can feel like a very overwhelming process because you've never done it before, right? And so, after having purchased my first home and understanding and kind of being in the steps of a first time home buyer, that's what really prompted me to specialize with first time home buyers. So, really the cornerstone of my business is just education first because I do understand that it can feel overwhelming. It's one of the biggest purchases you'll ever make, and therefore it's so important to feel like you understand what's going on.
Definitely. My first experience with home ownership was, after my dad died, my brother and I were able to refinance a property in our name. So it wasn't, an actual new loan. We were just modifying my dad's previous loan, moving it under my brother and mine's name. But when my boyfriend and I went to purchase our home, it was an interesting process because they, or I should say the underwriter, so many questions. I mean, because I have income from different sources, I had to provide so much extra information that I wouldn't think to. But it was nice that they were accommodating, they were patient. But I know we'll get into home buying and the requirements a little later in the episode, but I had two very different experiences. And I'm, curious to hear when we talk about it later, how things maybe have changed. But before we get into that, I saw on Instagram that you purchased a second home in Santa Fe, right? I mean, you may or may not know this, but one of my life goals is to own a second home in Palm Springs. So you are like pure inspiration for me. How was that process for you? Like, what was that like? And how do you feel owning a second home in a totally different state?
Yeah, it's really cool. It's funny because I actually found this old Instagram story that I had posted a year prior to us purchasing the property in Santa Fe. And I had made a comment like saving this for later when we purchase, or like adding this to my in Santa Fe dream board because a goal of ours is to purchase a property in Santa Fe. And so it was cool to see that. I will say it was scary. We've never purchased a property out of state. And as somebody who is in real estate and understands the process, state by state, there are different regulations and there are different processes within the home buying experience. Luckily, our realtor, she walked us through everything. But, even then, I did feel a little bit lost just because some of the processes, again, are totally different. It's funny because on Thanksgiving weekend is when we decided we would go to Santa Fe to look at properties. We looked at 12 different properties and none of them really spoke to us except one of them, but it was out of our price point. And given the market that we're in, we felt confident that we were just going to wait it out and we were going to keep looking. And one day, my husband was obsessively looking at Zillow and refreshed it and saw that the seller had dropped the price 25%. We found out the seller was really motivated, and that's when we jumped on the opportunity. And the goal of that property and why we purchased in Santa Fe is that we do foresee ourselves living there in the future. And so we wanted a property that we could rent out, but it could also act as a landing pad when we do go into town. So the way that the home is structured, there was an opportunity to rent out 3 different units. And so we're renting out 2 different units and keeping one for ourselves. So yeah, it was scary and we're definitely still navigating that market and it's very different than Austin, but it's been such a good learning experience to then invest in other states.
That's very cool. Such inspiration for me. And I know so many of my listeners. But Now I want to shift gears into home buying because, like I said, my experiences with taking out home loans was very mixed. You're the professional. Can you break down the home buying process for first time homeowners and maybe just some high level steps from start to finish? I know it can be a very lengthy process, so I don't, expect all the details, but if someone is listening to this and doesn't know what to expect, what would you say to them?
Yeah, so let me preface by saying that buying a home, it takes a lot of planning and it's a very personal journey. So everybody's home buying journey is going to look different. And so it's important to really tune into what you want and what your ultimately your next 5 years look like or 10 years look like. But the first step, I would say, and one of the most important steps is to align with a realtor, whether you find them like on social media, or maybe you can ask a friend who has purchased a property before. Maybe you can ask for a referral. The reason why I say finding a realtor is so important is because they're going to provide a smoother home buying experience for you off the bat, right? So they can provide recommendations on lenders and really they can provide and help that process in the beginning. Because I mean, quite frankly, like, and I've had buyers come to me where they're like, they've done a bunch of research prior and it's almost as if they like kind of confuse themselves because once you go into a Google rabbit hole, you're just like information overload. So that's why I say like a realtor can really walk you through the steps and like really guide you from start to finish. Also, just pro tip for anybody listening in who's curious about finding a realtor, like it's so important for a realtor to have initial consultations with you. If they're not listening to your overall goals and they're just wanting to show you houses, they're most likely not a good realtor. Like I provide so many preliminary consultations before I even show homes because I never want a buyer to feel or regret their home buying decision or get stuck, for example, with a mortgage that they may not be able to afford or whatever that looks like. So I'd say your first step is to find a realtor so you don't have to go into do all the research for yourself. The second step I would say is, and what I like to say is it's called checking your financial wellness. So there are several different components that a lender will look at. So the first one is credit. Credit is huge when applying for a loan. The higher your credit score, the better your interest rate and the more money they'll lend you. Depending on the type of loan you obtain, they'll want to see a credit score of no less than 580 for an FHA loan or 620 for a conventional. There are platforms that you can check your credit score for free, such as your personal bank or Credit Karma. And so that's one huge component. The second component that they'll want to look at is your debt to income, which I know we'll talk about in a bit, but they'll compare your debts to your income. So typically, they'll look at your gross monthly income and compare that to your debts. They'll also want to see savings. So they'll want to see that you have enough for a down payment, for closing costs, things like that. So it's important to understand like how much you should have saved. And then also they'll want to check your employment history. So as you had mentioned, and I'm also a business owner, so it's not impossible to get a loan. We're just like a trickier kind of borrower. So if you are a W-2 employee, you're considered like the golden child. It's very easy for you to get a loan. Your payments are very predictable. But with a 1099 or like, business owner, they'll want to see that you have 2 years of work history. They'll want to see profit and loss. So it's just important for you to connect with a lender early on. Honestly, I always tell everyone it's never too early to talk to a lender. I have clients who didn't want to be in a home for like a year and a half, and they're already talking to lenders because they just want a good lender is going to provide a roadmap and help you achieve home ownership. And it does take so much planning. So it's never too early to talk to a lender. And then I'd say the third thing, and one of the most important things, is to figure out how much you're wanting to spend per month on a home. So how long do you plan on being in the home? What are you looking for in a home? Is location important to you? Is the size of the home important to you? Oftentimes, unless we have tons and tons of disposable income, like a lot of us have to kind of sacrifice either location or maybe like the perfect home, especially for first time home buyers. So understanding what's most important to you, like for example, when I purchased my condo, I knew that location was so important. Like I wanted to be in the middle of downtown. I wanted to be walking distance to the trail. Like that was more important to me than the size of the home. And while in the grand scheme of things, maybe the condo didn't appreciate as quickly as a single family home. I 100% do not regret that decision of purchasing that condo. That condo brought me so much joy. So just making sure that it aligned with like what you're looking for.
That was incredibly helpful. So you said a few things that stuck out to me, and I just want to maybe pull the thread through a little bit further. You mentioned FHA, you need a 580 credit score. And then I think it was conventional, you need a 600 plus credit score. Can you talk a little bit about that? Like, what is FHA? What is conventional? And why do you need different credit scores for either loan?
Yeah, so both are really great loan programs. I'd say FHA, the reason why you need less of a higher credit score is because they're a little more forgiving. So it's for the borrower that may be more challenging credit or more debt. And so, as a first time home buyer with an FHA loan, you can put as little down as 3.5%. With a conventional loan, their requirements are a little more stricter, but you're most likely going to get a better interest rate. And thus, your credit score does need to be a minimum of 620, and your debt to income needs to be a little higher.
Do you recommend, like for a first time home buyer, is there one loan type you recommend over another?
Not necessarily. I mean, what I would do if I were a buyer, I would compare both with the lender and see which one makes the most sense. I will say one of the big differences is that with a conventional loan, so most first time home buyers won't have a full 20% down payment to put down, right? And that's okay. A lot of people don't. With both loans, you will have to pay mortgage insurance if you put less than 20% down. Now, the difference between the conventional and the FHA loan is that the conventional loan, once your loan to value hits 80%, the mortgage insurance does go away. Whereas with the FHA loan, that mortgage insurance stays there for the life of the loan. So just something to consider. And again, not the end of the world. Like I've had clients before where they only qualify for FHA. Maybe it's because they do have more challenging credit or maybe they have more debt. You can always refinance later and it's not a big deal. But it's really going to depend on that particular person.
That was helpful. And another thing that you mentioned was W 2 employees with 2 years of employment history are like the golden child. But let's assume someone who does want to purchase a home is a business owner. I mean, are there things that they should be aware of or just keep in mind as they start the home buying process?
Yeah, one of the biggest mistakes that I see, and I speak from experience, is that come tax season, which is, now, I find that as a business owner, you're already paying so much in taxes. And so anything that you can do to write off your taxes is obviously key. However, if you are planning on purchasing a property, I would 100% talk to a lender before you submit your taxes and have them review all your write offs because at the end of the day, let's say, for example, I make 100,000, but I write everything off and it makes me look like I'm making 40,000. Well, they don't care that you made 100,000. They're going to look at that 40,000. So if you do plan on purchasing a property, I would absolutely recommend talking to a lender before so that they can review your taxes before you submit them so that you are in a position to where you can purchase a home because that's one of the biggest mistakes I see.
That's such a good thing to share. And it really leads me nicely into this next question, which is what are some common misconceptions people have when starting the home buying journey?
Some common misconceptions. We live in a very microwave society. I think we're seeking instant gratification, and I don't think we slow down enough to really think through, and we just kind of rush through things. Buying a home takes so much planning. And I think that especially with social media and all of these platforms, so you see somebody like they bought a home, but you don't see what goes on in the background. And so really just asking yourself, is buying a home the right move for you? And also fully understanding the responsibility that comes with that.
Oh, I am so glad you said that because you're absolutely right. We live in an instant gratification society, but we also live in a society where we can see everybody's every move. And it's so easy to forget that they are showing those moves at their choice, right? Like you don't
Mhm.
see everything that goes on behind that move. And I think it can be really easy for people to take that and apply it or compare it to their own life and make them feel less than. So I'm really glad that you mentioned that. So, one thing that you mentioned was debt to income ratio. And this is something that, I help talk my clients through when they do decide that they want to start saving for a home. I think this is such an important part that people need to realize, but not a lot of information is out there about it until you actually get your feet wet with the home buying process. But it has been said that a 30% debt to income ratio is recommended when buying a house. And to my knowledge, that includes the mortgage. Is that accurate, or is there a more precise debt to income ratio amount that lenders are using right now? And just a final kind of point on that, does the debt to income ratio differ between different loan types?
Yes. So debt to income is going to differ between different loan types. And actually, a lender will allow that the DTI goes up to 50%. That is not ideal. Really, they want to see somewhere around 45 max, but it is going to depend on the loan type. And I've mentioned this before, and I just want to highlight that it's also very personal in regards to that buyer.
So I think maybe we should take a step back, Coco. Can you explain what debt to income ratio actually is and what it means? Because I have a feeling there are people who are listening that says, I think I know what that means, but can we hear from you what it actually means?
Yeah, so your debt to income, it's basically looking at your debts and comparing it to your income. So a lender is going to take things such as when they approve you for a loan, what they're basically looking at are your bigger expenses. So they're going to look at things like your auto loans, do you have to pay student loans? They'll take into consideration your rent and compare that to your gross monthly income to get a percentage. So what they want to look at is they're basically ensuring that you essentially can afford that home.
So you mentioned that some lenders or some loan types can go as high as 50% debt to income. So people understand what that means. Basically, the total amount of their debts. So let's say between student loans, car loans, credit card monthly payments, the total
Mhm.
value of their monthly payments has to be 50% or less of their income. So if they make 10,000 a month, their total monthly debt payments cannot exceed 5,000 a month to be approved for the loan.
Correct.
And
Mhm.
now is the mortgage included in that? So would it be 5,000 plus the mortgage amount, or would 5,000 include the mortgage amount that they are applying for?
So when you apply for a loan, they look at your rental payment. They will factor in future, one of the questions that a lender should ask you is, how much you're comfortable spending per month. Because I like to think of applying for a loan kind of like applying for a credit card. They may approve you for more than what you're actually comfortable spending. So it's important to understand and have that budget available when you are speaking to the lender, because they're going to then take that number and guide you on okay, you don't want to spend more than 3,500 per month on a mortgage. Here's where you need to be. So yeah.
Okay, that's helpful. Going back to first time home buyers, I know that there are a lot of programs out there designed to help first time home buyers. And I'm sure they vary by state or local programs. But do you have any insight that you can share about these programs? Any initial thoughts on them and if people should seek them out?
Yeah, so first time home buyer programs. So, again, one of the benefits of being a first time home buyer is that you have the opportunity to put very little down. So, again, with an FHA loan, you can put as little down as 3.5%, whereas conventional loan, you can put as little down anywhere between 3 to 5%. Again, that's going to be dependent on your financial qualifications. There are down payment assistance programs and grants available that can help cover parts of your down payment and closing costs, etc. And that's why it's important to explore these programs and express that to your realtor because they often have knowledge on different programs that could then benefit you. And from there, you're able to weigh out those pros and cons. For example, there's a down payment program called TSHAC, and it essentially helps you with a down payment. However, you will get a higher interest rate. So depending on, your goals and if that makes sense for you, that may be a good way or good outlet. The other thing is that there are different programs available depending on your profession. So there are programs for education, medical, police, things like that. So again, it's important to explore all your options and, understand, do these programs work well for my home buying journey? There are also different grant programs that are available through different lenders. Like, for example, I have helped maybe like over 15 buyers take advantage of a grant program through Bank of America. And it's a grant that doesn't need to get paid back. And it's really, really awesome. It helps a lot of my first time home buyers bring less money to the closing table. And like, again, I can't speak enough about this program because it's been such a crucial tool for a lot of my buyers.
That is so amazing to hear. In situations like that where grants are available, is it first come, first serve? Is it you have to apply and meet certain criteria? How does that typically work?
Yeah, so you will have to meet certain qualifications. So, like, for example, it may be area based, they may have area parameters around where you can purchase. It also may be income restricted. So, you may have to make up to a certain amount per year. Yeah, there are going to be different qualifications based on each program.
That's very helpful. And I think the biggest takeaway after that point is just have those conversations with your realtor so you know what options are available to you, because there could be things that are open to you that you may not know about if you don't have those conversations. Honesty time. Money management is not rocket science. It just feels that way because we tie our emotions, experiences, and sometimes our self-worth to our money. That needs to change, and I'm on a mission to help drive that change. In my new free masterclass, I'm sharing 3 cold, hard facts you need to know to shift your money perspective and finally start seeing results in your situation. I'm going to show you how to level up your finances so you can begin to see forward progress with your goals and have something to show for the money you work so hard for. The masterclass is only here for a short time and it's happening soon. So save your spot now by going to citygirlsavings.com/masterclass. I can't wait to see you there. Okay, so if someone wants to purchase their first home but rent it out or put it on Airbnb, does the purchase process differ since it will be an investment property?
Yes. So if you're purchasing a property as your primary residence, meaning you're actually going to be living in the home, you have the opportunity, depending on what kind of buyer you are, whether it be first time home buyer or a second time buyer, you can put as little down as 3.5 to 5%. If you're purchasing a property solely as an investment and intend to use it to rent it out, then you will have to put a minimum of 20% down. And keep in mind as well, your interest rate will most likely be higher than if you were to purchase it as your primary residence. So, something to keep in mind, and questions to explore when you are exploring this home buying purchase is, are there ways to buy the property as your primary residence, but also use it as an investment? And what I mean by that, house hacking is one tool that we used when we lived in a property before we purchased this home in Austin. We had a home that my husband had bought, and we actually rented out all the rooms. And so all of the rental income that we had paid for most of our mortgage. So it is possible to purchase a property as your primary residence and at the same time use it as an investment property. Obviously, you're going to want to check your city and county regulations, but you could also short term rent a room on the weekends, or you could maybe add an addition in the back or close off part of the home and have a separate living space. So there's a lot of ways to get creative. But yes, if you are purchasing a property as an investment, you will have to put 20% down, and also you will most likely have a higher interest rate.
So it sounds like the recommendation is if you can purchase this property, do your best to purchase it as a primary residence and make money from it in other ways, as opposed to solely purchasing as an investment property.
Right. Yeah. And again, it'll also just depend on the market where you're shopping, right? Austin is getting very expensive. And so buying an investment property may not make, financial sense as far as like that 20% down payment here in Austin, but like in other states where affordability is a lot lower, then maybe an investment property does make sense there. It's just going to depend.
That makes sense. What about secondary residence? Is that looked at as an investment property? So, like, if I wanted to buy my second home in Palm Springs, and I know it's California, but are they going to see that as an investment property, or are they going to see that as a second home for me? And would that
Yeah.
change the process?
It wouldn't necessarily change the process. There are loan programs where you could put 15% down as a second home, and you may get a better interest rate than if you were to buy it as an investment. I would explore that state's lending programs and all of that. But yeah, you can absolutely purchase a property as a second home and take some advantage of a lower down payment.
Okay, that's good to know. So, an investment property is technically viewed differently than a second home.
Yeah.
Got it.
And one thing to keep in mind is that not all lenders are going to be able to like do second home loans. So just something to keep in mind. I would definitely reach out to multiple lenders and see what kind of programs they offer.
I'm glad that you said that. I think Texas is a state where my brother and I were actually trying to refinance the mortgage so we refinanced the property that was my dad's. We got it in our names. But when interest rates dropped, we tried to refinance again to get like the lowest interest rate. And come to find out, you can't refinance second homes or investment properties in Texas. So know your information before you make these big decisions, because it can impact you in the future.
Yeah, absolutely. It's very state specific.
So one thing I like to help my clients with during the home buying process is making sure their budget can handle the new mortgage and expenses that come with owning a home. I feel like when you're used to living the apartment life or even just the tenant life, things are covered on your behalf, but it is not the same when you own your own home. What tips or advice do you have for people who are trying to get their budget in order and prepare for this new adventure?
Yeah. So the first thing I would do to prepare is, again, understand how much you need to have saved. And this can be achieved by connecting with a realtor or a lender, but really understanding like how much you need to have set aside and realistically running through example properties to understand how much you will be expected to pay. Also, filtering through your expenses, like what can you eliminate to get to your goal faster? Or how can you make more money, whether it be like a side hustle or a part time job? going back to the us living in a microwave society where we crave that instant gratification, the big thing is just reminding yourself of your bigger goal, and so you're not distracted by these frivolous purchases that will only like hold you back. The other thing, I actually have included this question in my buyer consultation because I think it's so important. Make sure that with any of your short term goals that you are at least parking your savings in a high yield savings account. I can't tell you how many times I've had clients who are just parking their savings in like Chase or Wells Fargo where they're not gaining any interest, and like you're really just doing yourself a disservice. You're working so hard to save that money, and so at the very, very minimum, make sure you park that money in a high yield savings account so it's working for you. The other thing I would say is, and I think that this is an important factor because I think that this gets kind of ignored or maybe overlooked, is having extra savings outside of your mortgage and all of that. Like, it is inevitable. Like, there will be a situation where you'll have to fix something or repair something. So that number is obviously going to look very personal depending on like your comfort level, but like just planning and expecting that things will break when you do own a home. So having that extra savings and padding is key. And honestly, especially in the economy that we're in, I hate to say it, but like, what if you get laid off? So like having that monthly payment set aside in the event that you were to get laid off, being okay, being comfortable. And then finally, I would say looking at the bigger picture. So like, again, going back to like comparing your home buying journey with other people, tuning into like what's important to you, how long do you plan to be in the home, where do you see yourself in 5 years, and does that align with you being a homeowner? Because between 2020 and 2022, when interest rates were very, very low, millennials were one of the biggest home buyers in the home buying sector. And not that it was like the cool, like next thing to do, but I do think that, borrowing money was a lot cheaper. So I don't feel like there was a lot of thought behind it. And like just understanding and asking yourself, like, do you plan on being in the home at least 5 years? Because if not, if you plan on like moving next year, home buying may not be the right move for you.
Wow, you shared so many great points. I can like touch on all of them. I think the ones that really stood out to me were the high yield savings account. Highly recommend that. I've talked about it on the podcast numerous times. It's just a game changer. If your money's going to be there, it may as well earn as much as possible. And then, yeah, it's inevitable that things will come up, right? And because you are the homeowner, you are in charge of fixing it, So
Mhm.
put yourself in a position to be able to fix it and not worry about how you're going to pay your mortgage next month.
Mhm.
So many great points. So you sort of touched on this, especially, when we saw the dip in interest rates in that time frame, really, COVID. But what are your thoughts on the current state of the housing market? There was a point where properties were booming, interest rates were low, like I said, COVID. Now we're seeing a flip, right? We saw a huge spike in interest rates. I think they're starting to come down a little bit, but what are your thoughts on this, and any words of wisdom for people who were waiting and preparing and now it seems like they missed out?
Yeah. It's funny, the housing market is interesting and buyer psychology is interesting now that we're out of like the 2 and 3% interest rates. Interest rates, I do recognize that they're much higher than they were even last year. I mean, today we're sitting at the low sixes, whereas in January 2022, we were in the fours. So interest rates have changed, and thus, monthly mortgage payments have increased quite a bit. However, the market is normalizing. What we saw the last 2 years really wasn't sustainable. And if you are in a position to buy and you can afford those monthly payments, Honestly, right now is a really, really good time to buy. You, as a buyer, you have two advantages. You have the opportunity to negotiate, possibly get a property for less than the list price. Sellers are feeling really anxious right now about their home sitting on the market, and they're willing to work with a buyer now. So it's awesome because I've had numerous buyers take advantage of credits that they can use to buy down their interest rate, which in turn, lowers their monthly mortgage payment. And also, the other key thing is buyers have time to actually think about what they want. They can go see a property, sleep on it, take several days to really think about if that's the right move for them. Whereas, like before, I do feel like there were a lot of buyers, not a lot, but there are definitely buyers who maybe have a little bit of buyer's remorse. Maybe they sacrificed location or the kind of home that they wanted. They just wanted to get into something. And with the chaos of the market, I do think that they would have approached it differently. So,
I remember reading an article about these investment companies buying so many properties when the rates were so low, and it was leaving like the first time home buyers who wanted their forever home kind of like out in the cold. Do you think that has settled down a little bit?
yes. So gone are the days when even bad flips would sell. I mean, I saw like the most horrible homes just like fly off the shelves, and even overpriced homes because buyers were desperate and they just wanted to get into something. And so companies like Open Door, which are these iBuyer programs that purchase properties and then turn around and sell it for more. I mean, we're seeing that less and less. I do think that buyers are more picky. They really have the time to think about what they want because there is more inventory and there are less buyers in the market. So it's really, really important, especially for those that are planning on flipping and all of that. Like, make sure you improve those homes well because, especially sellers who are just selling their home, it's so important to have your home shine and not cut corners because these buyers they're really picky.
So when the whole craze was happening and the interest rates were low and properties like were flying off the shelves, as you said, property values spiked, especially in Austin. Are you seeing property values go down now, or would you say they've kind of just stabled out at that high point?
Yeah, so this is going to be very, very neighborhood specific, but just in general, like the city of Austin, our values have certainly declined. I mean, I think what last year or 2 years ago, we were like named like the hottest market to invest in. Like Austin was just crazy. I mean, Tesla moved here, Amazon, there's so many companies that are putting down roots here in Texas. So yeah, our sales price has gone down. In fact, our median sales price in Austin, so Austin, Texas, in June of 2022, it was 615,000. In February of 2023, our median sales price is 530,000. So it has gone down significantly. Again, that is a very like general statement, right? It's going to be very specific to the neighborhood. Some have declined less than others, but we just experienced so much growth that it was inevitable. And Austin is definitely one of the cities that has been impacted more than others.
So the person who purchased the home when it was 615,000, but now it's 530,000, they essentially lost money on this investment if they sold, right? But, obviously
Mhm.
it can go up over time. But is that how you would essentially look at that?
Yeah. So again, it's going to be very specific on that where that particular home is located. But yeah, I mean, if you purchased a home, in early 2022 or even late 2021, I would stay in the home for at least a few years to recoup that value. Obviously, it wouldn't be a good time to buy. And that's why going back to the question that everyone should ask themselves, buying real estate, it's not like a short term investment. Sure, I mean, it can be for some people, but like really purchasing a property and holding it for anywhere between 5 to 10 years is key to really reap those benefits.
So then I'm very curious to hear your answer to this next question. What are your thoughts on short term versus long term rentals? I know we've talked a lot about home ownership, and obviously renting out your properties is a strategy for homes that you may own, but can we talk a little bit about rental properties, and do you prefer short or long term? What are your thoughts on that?
Yeah, so this is going to be really dependent on the kind of investor and what kind of like responsibility they want to take on. The benefit of short term rental is that you can make significantly more per month than maybe a long term rental because you can most likely you'll be able to charge more. However, with short term rentals, you are going to have to incur more costs. So, with a short term rental, you're going to have to pay to furnish the property. You're going to have to pay for utilities. You're going to have to pay for things like the toiletries, like paper towels. And then you're also going to have to pay for, like, for example, internet and all of that. And another key thing is, every time the property turns over to a new guest, you're going to have to pay a cleaner to come clean the property. So it has more costs associated to it. You're most likely going to, depending on if you're personally managing the property yourself or hiring it out, it's what I call a noisier investment, meaning like guests are most likely going to be reaching out to you more than a long term rental. I think both can be great. I prefer long term rentals because I most likely only have to find a tenant for a year. But one of the things that has become more popular and one thing that is a loophole in markets where short-term rentals they're really cracking down is actually midterm renting. So this is something that we do in Santa Fe. We are midterm renting a casita that's about 700 square feet. And what it means is that the property is leased anywhere between like 3 to 6 months. So we're getting around the Santa Fe loopholes. So Santa Fe they are cracking down on short-term rentals and they're not allowing permits. So if you buy a property in the county and you plan on short-term renting it, you can't apply for a permit for at least a year. So we wanted a way to get around that. So we furnished this casita and we are renting it out for 6 months.
I actually talked with a client about this because she was saying something similar. Like there are nurses, like travel nurses or people in differing professions that need kind of a short term stay, but not just a weekend. And this seems to be something that's becoming increasingly popular, but also pretty lucrative.
Yeah, it is becoming more and more popular. I am seeing more midterm rentals. I think Austin in general is becoming very saturated with Airbnbs and short term rentals. So midterm rentals is a great way to kind of get around that and possibly occupy your property for longer. But really understanding the market that you're investing in is key, seeing what kind of jobs are coming into that area, how many hospitals are in the area? Is there like a main university in your market to really identify the right market for you to invest in?
I personally don't have experience with short term rentals, only long term, and I enjoy them. But I had a realtor, you, who helped make the process really smooth to find tenants. Any tips for people who are looking to rent out their properties, even like a room or a new home that they do plan to use as a long term rental? Any tips?
Yeah. So one thing is I would think of your property as a business and treat it as that and know and kind of expect that things will break and need to get replaced. I think we can make it very personal. Like, for example, the Santa Fe house. I keep reminding my husband, I'm like, this is a business. This is a business. This is, somebody's going to break the furniture, whatever. So it's important to set aside like your emotions around that. And I think it's crucial if you are planning on renting out either a part of your property or like the entire thing. It's important to have set aside savings every month for like those big ticket items that you'll you'll need to do over time, because it's not a matter of like if, it's like when. And even just routine and maintenance is key. So the other thing is do your due diligence, having those prospective tenants apply and looking thoroughly through their documentation to ensure that, they can cover the rent. Also asking yourself, like, do I want to self manage or do I want to hire a property manager? I think that's one of the key things that gets often overlooked. But if you plan on self managing, making sure you have a roster of vendors in case you need to call an electrician or a plumber, or whatever vendor you may need. And then also, I think this is huge because I know we've all had a rental that we've lived in where the landlord honestly just sucks. Like, they're super unresponsive. They never repair things. So at the end of the day, like, treating others the way that you want to be treated and ensuring you're very responsive and reacting in a timely manner.
That is great advice. So I have a client in Missouri who owns her home, and she purchased another home with the intention of renting out her first home. She told me that her current realtor, the one who helped her buy the home, doesn't help with renting homes out. Is that common or popular for realtors to like not even deal with renting?
I think it'll depend on the kind of services that realtor offers. Like, for example, we work with investors who want to rent out their property. So, for example, if you came to us and you'd say, like, hey, we want help renting out my home, what we offer is we market the property, we'll take professional photography and ensure that we can get your property in front of as many eyes as possible. And then we help facilitate the applicant. So we use a third party company that the applicant will apply to, and then we help facilitate that handoff, if you will. But after that, once the landlord has a tenant, our job is done there. We don't do any property management. So I think it just depends on what that realtor provides in regards to their services. It's neither here nor there, but they may not even want to deal with rentals.
Yeah, I mean, I think that was the case. Thankfully, like, exactly what you described, that was my experience because I worked with you and it made the process very smooth, right? Like, it took a lot of the worry off of my plate because you guys were providing that service. So I think if anyone is looking to rent out their home or just get into the rental space period, having that realtor that will help facilitate that process can make a huge difference.
Mm-hmm. Yeah.
Okay, as we are approaching the end of the conversation, I really want your thoughts on this question. Do you have any advice for people who are listening to this episode who want to own a home, but feel like with their current situation, it's just impossible?
Yeah. So I think the main thing is like really taking this huge mountain of a goal and like taking it one step at a time first by figuring out what you need to have to buy the home. That's huge. So you can kind of take those pieces bit by bit to understand like how to get there. Also, understanding like what you can change to get there. So, like, for example, maybe your situation is like you just don't have enough in savings. Can you temporarily get a part-time job, or like can you maybe move or have an extra roommate to help with like your monthly rental fees? Identifying what you need to have and how to get there is key. The other thing that I feel like, especially people of color, we don't have this advantage of is I often have buyers who have gifts, who get gifts from relatives or whatever that looks like. If you have a family member or have a friend or whatever that can gift you the money to purchase the property, why not ask, right? We're often very quick to tell our favorite aunt or our mom, like the next gift that we want for Christmas or our birthday. But like, what if instead they contributed like a portion of your down payment or your closing costs? So definitely identifying what you need to do in order to get to your goal is huge, and really taking it step by step and not getting overwhelmed or feeling discouraged by maybe like a friend who had just purchased a home. Because again, going back to social media and stuff, we're always looking at everybody's finish line, but never like their journey to get there.
Such great advice. Coco, this was such a great conversation. Before we wrap, what's next for you and your real estate career? And I know my listeners are going to want to connect with you. Where can they do that?
Yeah, so it's funny you ask. I actually haven't said this publicly yet, but this month I'm starting to get my real estate license in New Mexico. So my goal is to service Santa Fe in the future. We won't be moving there anytime soon, but it's definitely a topic of conversation in our household for the future. So that's super exciting. And then just being in real estate has definitely opened my eyes up to the opportunity to build generational wealth for not only our family, but for my extended family. And so this career path has really challenged me. And so, in regards to just real estate in general, we're exploring more investment outlets. So, investing out of state and investing in different real estate avenues as is a huge goal of ours. We definitely want to create enough cash flow to cover our bills and our lifestyle. And then, yeah, so those are the next sort of steps in my world. And as far as like where people can find me, my main home is Instagram. So you can find me at Hello Coco Marie. And on there in my bio, I have a Calendly link if you are curious and want to walk through your own home buying journey. I have my calendar on there. I provide complimentary preliminary consultations. And I'm really just coming from a point of education. And even if you don't live in Texas, I can absolutely connect you to other realtors all around the state. So I would love to connect. And if y'all ever have any questions, please shoot me a DM on Instagram. I create the content on my Instagram straight from questions that I receive in real life. So
I will definitely link to your Instagram in the show notes because you provide such good information there. I know people will follow. Thank you so much, Coco.
Thank you.
Thank you so much for tuning into City Girl Savings today. I hope you feel empowered and inspired to master your money as you make your way to your dream life. Make sure you subscribe so you're the first to know when a new episode comes out. I truly value your thoughts and feedback, so please leave a review and let me know how this podcast has impacted you. Can't wait to chat soon and make it a great day.